Hey guys, James here with Waterford Business Solutions. And one of our goals here, in addition to making sure that you understand your business's finances, understand what the profit and loss statement's looking at, understand what the balance sheet's looking at, and really just understand the finances as a whole, is to help you with taxes and help you with your tax planning and tax saving strategies. And one of the best ways to save that money there is going to potentially, based off of your business, make an S-Corp election. S-Corp elections can save businesses a ton of money here because it removes you from having to pay self-employment taxes. And self-employment taxes are pretty weighty there. It's going to be pretty much a flat 15.5% tax that you're paying on any business income that you have whenever you're in a partnership or whenever you're in a single member LLC or a sole proprietorship or something like that. So they can add up very, very quickly. However, just because it gets you out of that 15.5% doesn't mean that it's going to be the best financial decision or the best option for you and your business. So today we wanted to talk about just that. Before we jump in, as always, guys, I invite you to go ahead, subscribe to our channel here. That way you get more information just like this. We put out videos every Monday morning just so that we can help educate everyone on anything and everything tax, financial, and business planning here. It's definitely great resources and can really help you to understand your business. I also go ahead and invite you to share this video with anyone that you think might be able to utilize this information. Now, as far as S-Corps go, like I said, they can save you a lot of money by getting you out of that self-employment tax. But in doing that, you have to make sure that you are setting up and you are paying yourself a reasonable salary. It is a requirement to be an S-Corp that any active owner, any owner that is active in running the business day to day, must be paid for a reasonable salary for what it is that they are doing in the business. Now, unfortunately, I hate to say this, that's not super well defined. I can't define it for you, the IRS can't define it for you, because there isn't something that comes out and says, oh, a reasonable salary is $50K a year, or a reasonable salary is $75K a year. That doesn't exist. What traditionally has stood up, though, is going to be the fact that if you were to quit your job at your business and go work for your competitor doing the exact same thing, what would you reasonably expect to get paid there? So that's going to be based off of the size of your business. That's going to be based off of what you're doing in the business, how much time you're involved. I mean, let's say that you're a part-time office manager is exactly what you're doing in the business, and you're only doing this part-time because you've got other staff that's running it full-time for you. Your reasonable salary could be substantially lower than if you were a full-time office manager, or if you were a full-time field technician or a full-time service manager or something like that. So based off of what you're doing in the business could substantially change what is considered reasonable for you there. So definitely keep all of that in mind when you are setting and defining what is a reasonable salary for you. Now, with all of that being said, that reasonable salary is going to have to come out of payroll. You're going to have to pay income taxes on that, have that withheld, but you're also going to end up paying Social Security and Medicare taxes on that. That's going to be basically 7.5% that the business pays and 7.5% that you as the employee, in this case, pays. So you're still going to be paying that 15.5% self-employment tax, because that's all self-employment is covering is Medicare and Social Security. The difference is, instead of paying it on all of the earnings of the business, you're only going to pay it on that reasonable salary. So here comes thing number one of whether or not it makes sense for you to be an S corporation. If your business is not earning enough money to pay you that reasonable salary, then your business cannot afford to be an S-Corp because A, they can't pay you that reasonable salary, and B, they're going to have to pay the taxes and everything on top of that. In addition to that, if they can't pay you that reasonable salary in the first place, you're going to be paying the self-employment, the Social Security and Medicare on all those earnings in the first place. So it's not going to save you any money by being an S-Corp if you aren't making above and beyond that reasonable salary. And keep in mind, by being on payroll, you're not just going to have that 7.5% Medicare and Social Security match. You're also going to have federal unemployment. You're going to have state unemployment, depending on the state and what their requirements are there. You may have workers' comp. You will have the cost of whatever payroll software you've chosen to use. And you may have additional expenses for benefits, etc., that you become eligible for by being an employee. So you have, at minimum, typically speaking, 10% above and beyond that reasonable salary, if not 15%, that you are going to need to cover. So if we set that reasonable salary at $75,000, 10% over that's going to be another $7,500. So you're going to be at $82,500 is the amount of money that you are going to spend to pay yourself a reasonable salary. So if your business is only making $50K a year, that's $32,000 over that. You're paying Medicare, Social Security on that $75,000. So you're paying it on $25,000 more than you would. And you're going ahead and incurring all these additional expenses above and beyond that. Even if your business is making $75,000 a year, it's still $7,000, $8,000 above that. And you're losing money there. So while you're saving money on taxes in theory, which you aren't in either of these scenarios, you're still losing money in the business and you're still spending more money. Whenever we're talking tax saving strategies, the red line, the bottom line, is not just, hey, how much are you paying in taxes or how much are you not paying in taxes? It's how much is it going to cost you to save that money in taxes in the first place that we want to consider. So that's kind of thing number one, is you've got to make sure your business can afford to pay you the reasonable salary and all incurred expenses above and beyond that. So based off of whatever your reasonable salary is, typically speaking, you're going to need to add 25-ish K per owner, per active shareholder. Again, this is any active. So if you've got 6 shareholders and all 6 of them are active in the business, all 6 of them are going to have to be getting a reasonable salary. So generally speaking, we're going to take a look at about 25K above whatever that reasonable salary would be before it starts making a financial sense. So for most of my clientele in the trades, if they are an owner-operator working in the field, they're not a office manager or something like that, generally speaking, we're going to see that income to tax savings start to make sense at around 100 to 120K a year in profit. Not in sales, but in profit. The other thing that you've got to keep in mind with S-Corps and getting out of that self-employment tax is there's a tax deduction for paying self-employment tax. So yes, while you're going to have to, and let's just use this example, pay $15,000 on $100,000 of income as a sole member or a single member LLC that's not an S-Corp, you're going to pay $15,000 in self-employment taxes. 50% of that goes to reduce your taxable income. So $7,500 of that number will reduce your taxable income. So instead of making $100,000 for income taxes, you're only making $92,000 for income taxes. So it's going to reduce the amount of income taxes you're paying because you paid these self-employment taxes. So again, it goes back to how much more money above and beyond that reasonable salary do you have to make for it to start making sense. And overall, it's going to stick the same here. You're going to need to be, as a single member, owner operator, either LLC or sole proprietorship, there's one person here that's going to need that reasonable salary. You're going to be around $100,000 to $120,000. If you've got two guys out here or two people out here that are needing to get that reasonable salary, you're going to be more around 150 to 175,000, and it's going to keep going up over and over and over again based off of the number of people that you have as owners in the company. So definitely keep that in mind. While an S-Corp can save you a lot of money, it's not a guarantee that it's going to save you that money. And that's the biggest thing that you need to look out for, is doing an analysis and understanding everything involved with being an S-Corp. Because in addition to having the payroll taxes, having the overhead benefits, other expenses of being on payroll, you're also going to have the expenses of compliance with being an S-Corp. Because as an S-Corp, you're going to have to file a separate business return and a separate personal return. There's more costs there because there's two different returns there. So again, more expensive to be an S-Corp. You're going to have compliance requirements depending on your state for meetings, for tax payments, for things like that. And this all varies state by state. So just because an S-Corp can save you a lot of money, it doesn't always make sense for you to become an S-Corp if you don't meet all of the standards that are needed there. Hopefully you guys found this very informational. As stated earlier, I invite you to go ahead and like and subscribe to get more information like this. And if you want help or an analysis of whether your business could save money by being an S-Corp, don't hesitate to reach out to us here at Waterford Business Solutions. You can give us a call at 864-351-0852 or email us at info@waterfordbusiness.com, and we'd be happy to talk with you and work with you there. Anything that is involved tax-wise, business planning-wise, anything like that, that's what we specialize in. And we work a lot specifically with the trades, HVAC, plumbing, and electrical here, just because that is our area of expertise. Until next week, guys, have a wonderful rest of your week.